Supermicrocomputer, SMCI, has once again become one of the most hotly debated names in the AI infrastructure space as recent developments continue to polarize investors. The announcement of a $2 billion revolving credit facility led by JPMorgan has injected new energy and controversy into the discussion. Supporters see the expanded credit line as a strong vote of confidence from major lenders and a crucial tool that will allow SMCI to scale manufacturing, manage inventory cycles, and fund rapid expansion tied to high performance server demand. Bulls argue that the market is still undervaluing SMCI's position at the center of the AI compute boom. The company's aggressive push into high density and liquid cooled server systems, now increasingly essential for the next generation of AI data centers, positions it as a key beneficiary of hyperscale AI buildouts. Speculation around XAI's ongoing data center expansion, as well as anticipation ahead of CES announcements, has fueled optimism that SMCI is only scratching the surface of its revenue potential. Many also note that tax loss harvesting season has ended, removing a technical overhang that could clear the way for renewed institutional inflows, and potentially a short squeeze if sentiment flips. But the bull thesis isn't going unchallenged. A vocal slice of the community continues to express skepticism, pointing to management credibility concerns, execution uncertainty, and the reliance on external financing as red flags. Bears argue that while AI demand is real, SMCI's past guidance swings, margin pressures, and operational strains remain unresolved. For these investors, the new credit facility is not a bullish expansion tool, it's a signal that the company must lean on leverage to keep pace, which could amplify risk if growth slows. Some also warn that despite broader market rallies, SMCI has lagged at key moments, suggesting that structural concerns may still be weighing on sentiment. As a result, SMCI has become a battleground stock. Bulls see a misunderstood AI infrastructure leader with explosive upside potential. Bears see a capital intensive manufacturer exposed to execution risk and market hype cycles. Either way, volatility remains the norm, and the next wave of catalysts, including earnings, contract updates, and industry event news, may determine whether SMCI breaks out of its recent slump or faces renewed selling pressure.
Okay, so far it's a regular day for the stock, given the fact that the sort of volume that it has traded so far is what it usually trades. But we still have an hour and 23 minutes before the session of today, the 5th of January ends. So the stock is down 1.79%. Volatility is expected to increase in the coming days. That may be because maybe some things are going on its options grid. So let's have a look and see if we have enough memory for that. Let's see what's going on. We'll begin with the January 16 series. That if it's going to load up. Okay, nothing's coming up there. We'll come back to it later on. Okay, so the line trend is now bearish. Now bearish. Okay, the extrapolation of its 3-day moving averages for lower prices, regardless. Lower prices going all the way towards the 3rd of February. Then after that, it might pick up a bounce. So this extrapolation is pointing to so many days ahead. There isn't any guarantee that that will be the case. If anything, at least we can rely on what is being extrapolated up till the next 3 trading sessions. That is Thursday, the 8th of January, and it's still for lower prices. The 40-day moving average is equally expected to keep declining as well to serve as a resistance to any impending expansion. As such, the stock is expected to trade within the space here that is formed by the extrapolation of its 40-day moving average and this 3-day moving average. So nothing, no uh, left to this extrapolation, no real expansion is expected. Momentum, you can see is equally flat as well. That's the extrapolation, flat going all the way towards mid February or early to mid February. As things stand right now, projections are not saying anything fantastic to the upside. Nothing at all to the upside. We have 8.13 and negative 2.47, negative 9.07. Yeah, I see. Obviously, stocks don't trade in negatives. In other words, they are those negative prices are pointing to some seriously fractional prices. Let's see what we have on its 4-hour chart. Okay, this bounce that has picked up, that kicked in. No, no, no. It's expected to pick up a bounce and possibly maintain it up till the 7th of January, and then after that, the downtrend is expected to continue. So yeah, in the interim, you could just say that at least in the interim, at least up till the 8th of January, more of a consolidation is expected, and then after that. The contraction or the downtrend is expected to continue after that. Momentum is also expected to pick up and remain strong at least up till the pre-market session of tomorrow the 6th. And then after that, yeah, downhill it goes. All of those are just extrapolations. No guarantee that that will be the case at all. Here on this 4-hour chart, we have an upper projection of 30.43, just fractionally above its current price of 30.31 as things stand right now. Okay, going back to the 4-hour chart, let's see whether we can pick up some probabilities. Yeah, let's see whether that will cheer us up. Probability of it retesting it's Friday the 2nd of January 2026 close of 30.96 is yeah, not fantastic, less than 50%. Yeah, not good at all, but it doesn't mean anything statistically. It may still, it doesn't change anything at all. It's not, it's just for reference sake, you know. Yeah. Okay. So that's what's going on right now. The stock is trending as things stand right now. Yeah. So have a look and see what you make of SMCI. Let's see whether we can. Yeah. Okay. We have the options grid has loaded. Let's see whether we can get anything going on here. Let's see whether we can get anything. It's taking time. Yeah. Nothing is coming up. It takes a lot of memory to. Yeah. Okay. Well, the fact that we have that implied value this 78% with reference to this implied volatility of 78.59% with reference to its historical volatility, which is less. It's an indication that maybe something is going on there. Yeah. Okay. Let's see what we have here. Yeah. $31. Could this be what is worrying them? That is what could it be? Could this be what is behind that volatility increasing to around 78%? It could be. It could be. Yeah. But they are surely option traders are heavily on the calls on the put side of things. You know. So see what you make of SMCI, and thank you very much for watching this video.